Hi, I'm Peter Rose, founder of Longwood Currency Trading. If you're just starting Forex trading, you need to do these three things now. I've had, several, not a lot, but several recent emails from some of you that are just trying to get started in your trading. And you stumbled on my channel and you've watched a few videos and you're not particularly looking for the magic pill, because I don't teach magic pill. I teach the reality of trading, and that no matter how successful you are at trading, you're going to take some hits and you're going to take some stumbles along the way until you learn what not to do. But that's the key to the thing, is learning what not to do. Because as Jesse Livermore said, if you know what not to do, then you'll figure out what to do. And that will, in turn, put you on the right track to consistency. That's your number one step that you want to go on. Not the three things that you need to do now, but that will put you on the step that you need to go on. But the questions that I'm getting from you is, how do I start? In your videos, you talk about this massive information that's available out there, and that you need to know the relevant information in order to get a good solid start. What is that relative information? How do I get a good start? Look, if you've started your trading, and not in a demo, because you got to get out of demo pretty quick. But if you've done a little bit of trading in live and you're not having any success there and you're scrambling around, well, first of all, you're not ready to be successful. There's things that you need to learn before you're going to be able to do that. And there's experiences that you need to have. And so to get you foundationed and all that stuff is a course. I mean, I work with people that are struggling, that have traded in a live account, at least $1,000 live account, and 6 months, 50 to 100 trades. That's the kind of background and experience where my expertise can come in and help you, because you can say, you're not asking a question like, oh, how do I do a Bollinger Band, or how do I size my bank and my risk? That's all just plumbing. Why would you pay me thousands of dollars to teach you plumbing when you can go to babypips.com? And don't listen to these other guys that are out there that are telling you that you need to know this stuff in order to, you don't. There's so much stuff that you do not need to know. Like driving a car. You don't need to know a combustion theory or brake pressure analysis or even how to change a tire. Just three simple steps. You need to know, here's the key and this is where you put it. And how to turn it on. That's one. Then you need to know where the shift lever is to get into gear. And you need to know the difference between the brake pedal and the gas pedal. That's it. That's all you need to know. Oh, but you need to know what a stop sign is. You need to know. No, you don't. And that's so true in Forex trading. I try to make things simple. If you take one of my courses and you get the course document, it's just not a course. You get me in consulting. That's why it's expensive, because I'm going to work with you. But you get the course document and everybody says the same thing. Oh, I've read that before. Oh, I know that. Why aren't you successful then? It's because nobody pointed out what that relevant information was. They didn't order it sequentially so that you didn't have to jump around trying to figure out the order that you're supposed to execute that stuff in. And nobody bothered to show you the what, the how, and the when in the order that they're supposed to be placed in, according to what I call the event response model in software engineering. I bring 33 years of experience as a software engineer solving complex problems and using what's called the software development lifecycle, the SDLC, in order to solve those problems. And I use that to develop what I call, in the last 10 years, the life cycle of a currency position. Entry analysis, position management, exit methodology. If you haven't seen some of my videos that I go over that stuff, go back through the catalog. I've got over 500 videos. So take a look at the catalog and see what I'm talking about by this stuff and how simple trading can be made. But if you're just getting started, you need some baseline to go by. And this is what you're really asking, what somebody is asking me to help them with. I don't really work with rote beginners because I don't want you paying thousands of dollars to learn stuff that you can learn for free. I want to be able to show you what to do with those things, right? But I spend an awful lot of time emailing back and forth with beginners, trying to get them at least pointed in the right direction, because not everybody can afford to take a course, or a lot of people don't want to take a course from me because I'm pretty demanding. It's money. It's your security, your family security we're talking about. This isn't for shits or grins. Why would you put $20,000 or $30,000 up in your bank and trade to screw around? You wouldn't. But do you think really that you're going to take a $500 account and you're going to turn that into $100,000? Well, maybe over 10 years, but you're going to have to lose that $500 and $10,000 many times if you don't have the correct path of education. Can you take a $500 account and turn it into several $1,000s in several months? Yeah, you can. Can you do that, many times? Well, yeah, but is that really going to help you trade a $30,000 account or trading a 10 lot? No, because the stuff that you need to do with a small account to turn it into, quote, a large account, I mean, $500 to $3,000, that's going from small to large. Can you take a $50,000 account and take that to $300,000? That's basically the same proportion. No, because it's different. Why is it different, Peter? You just move in the decimal point. No, it's more than that. And if you don't understand that, that's gonna jam you up. But in that real beginner stage, they're saying, Peter, just tell me what I should do. So, okay, let's do that. All right. As you can see, I'm in the kitchen, and it's this is late February of 2025, so you can see it's snow on the ground outside. If you look in the distance there, you can see our little tree house that we have. It was a great thing. We bought the property, and Sue and I just looked at that and goes, is that really cool? Who's got a tree house? It's an overcast day, and we're going to catch some snow later. Going into late February, and then we're off for a couple of days starting tomorrow with my granddaughter, and we're going to go up to one of the ski mountains, and I'll let Sue and my granddaughter ski. I don't ski. I've got a degree in physics, and I understand that things that go down slick hills go really, really fast, and that the crash tends to be catastrophic. I didn't grow up with skiing or have any experience. I've been skiing. That's fine. I'm going to sit in the lodge and drink coffee and read a book. And before we go, I thought I would do this video because I just got one of those emails yesterday. What do I do? If you could point me in what would I do? Well, here's the 3 things. And I'm going to list them real quick because for those of you that are looking for the magic sauce or don't have the attention span to really listen to good education, here they are. And then you can go off and watch an entertainment channel. You need a good broker, at least $1,000 live account, and you need to set your entry stop short. That's it. Thanks for watching this far. If you carry on through the rest of the video with me, let's talk about a good broker, number 1. Well, what is a good broker? Well, they have to be financially stable. They have to be regulated. Well, how do you find that out? Well, you have to go to in the United States, it'd be the Securities and Exchange Commission. They have to register. They have to put their financial statements there, and they have to show their solidarity. Also, how long have they been around? I have to warn you that in an economic currency crisis, 80% of the brokers will go broke. That's what's happened before several times. If you go back to what's called the Swiss currency crisis not long ago, well, relatively speaking, you might not have been alive during the Swiss currency crisis, but a lot of the brokers went, a lot of them, 80%, 90% of them went under totally. And you say, well, that can't happen again. Well, yes, it can. And there's some significant reasons for that. And this video is not going to be long. I'm not going to go into those reasons. I'm just telling you to have a good broker. So a good broker is financially stable. It is registered. And I don't know. There are good brokers that are offering 200 and 500, 100 to 200, 500 leverage. It's just insanity. They offer that to suck you in so that you lose your money and they make the other side, because the broker doesn't trade directly with the interbank market until the end of the day. It accumulates all the orders and it takes the other side of your order. So if you fail, they win. If you lose $1,000, they make the $1,000 because they took the other side of that trade. And since as a beginning broker, as a beginning trader, the odds are 90% against you. And so the broker is got 90% odds in their favor that when they hold these positions that they'll win, that they'll win the other side. And so what happens in a currency crisis when a lot of people just win because you just dumb, stupid happen to be on the right side of the trade? They have a liquidity crisis. They can't fulfill the orders. And they can't go into the interbank market at that time because the interbank market is the one that's causing all the problems. And so there's problems. So you're really going to have to investigate what a good broker is. If you have a good broker registered and been around for a while and financially stable, and even if they do offer the 500 to 1 leverage, don't take it. You don't have to take it. I'm working with a couple of folks right now that are just kind of getting started in this stuff, and they really don't have the background that they need to take the fast track course, but I've worked with them over the beginning steps. I'll work with you if you really are serious about it. But if you are looking for magic pills and instants, I can't do that. You know, I've got a fast track program that's 6 weeks for an experienced trader, 6 months, $1,000 account at least, 50 to 100 trades. That's experience as far as beginners go. You know, experienced beginner, not experienced. But having seen enough of the market over that 6-month period of time and the number of trades that they put on, you can begin to see what I'm talking about. So these folks that I do work with that are beginners, we're working toward a stable base of that relevant information. That's what we're working with. And the implied foundation of that is good broker, $1,000 accountant, setting a short entry stop in order to prepare them for good risk management, because trading is all about risk management. And so having a good broker that offers 500 to 1 leverage, they're not doing you any favor, but they're letting the people with only the $500 or the $300 or $50 to come in and fuck around until they lose that money. And then they go, oh, I'm not going to do this. I'll go trade crypto with Bob, you know, because everybody's making money in crypto. That's like saying I'm down at the gun range and I'm practicing shooting with this gun and I keep missing the target and I get angry. And so I keep missing that target. So I'm not going to shoot at the target anymore. I'm going to put the gun here and I'm going to blow my brains out because I got nothing better to do. That's what happens when you go to crypto or you go to anything. These markets aren't rigged. There's rules. You learn the rules and you can survive in that market. You don't have to be part of the 90%. But if you don't have a good broker that's financially stable, that when we have the next economic crisis, whenever that's going to be, or they change the rules, and like they just did with the prop firms, for example, and the whole market went into a shitstorm, and many of the prop firms closed and left their clients holding the bag. You need to understand what that good broker is. Make sure you're trading with a good broker and don't trade with that high leverage. Well, Peter, what side of leverage should I trade at? I can't advise you on that. I mean, this is a video, for God's sakes. If you really are interested in this stuff, send me an email and we'll chat a little bit. And if all you have is a bunch of questions that are unrelated, I'll answer a couple of those and then I'm going to tell you the truth. You don't have enough experience to be asking the questions that you're asking. I get people that have no experience at all that want to talk about staging lots and reverse staging. It's insanity. It's just insanity. And I tell them, I'm sorry, I don't think I'm going to be able to help you, and I don't have the time to take you through the beginner steps because you're impatient and you're looking for some magic sauce that's going to answer your problems. You don't even know they're problems. I just, let's be realistic. I suppose if you're this far along in the video, that you are responsible and you are willing to do the work. I thank you for staying this far. Stay a little bit longer with me because these 3 points are pretty critical for establishing a baseline. And you could be an experienced trader or beginner experienced trader, even an intermediate trader, and not have this understanding or this background. So I'm glad that I can help you. And if you think I'm shitting you, well that's okay. Go listen to somebody that tells you that Bollinger Band is going to be the answer to your success, or the RSI engulfing candle pattern is the way to go. You think whatever you want to think. My channel's here, and I'm here to try to help you. So, good broker. Second, you have to have at least $1,000 live account and be trading in that. Do you really think that you're going to learn anything trading in demo? You are not. When I have a student, we'll train in demo for maybe a week so that you learn your trading platform, you learn how to execute your orders, you make sure that your ability to close all positions and all open orders is a one button thing and you don't have to close each one individually. How do you do that? How do you put moving average lines up on the chart that you're working on? Learn the different chart time frames and all that other kind of stuff. That's what you learn in demo. How long does it take to do that? I mean, what are you doing? Doing this an hour a day or something? You're wasting your time. You're not going to learn currency trading an hour a day. I have my guys, they're working with me, they're probably doing 4 hours a day of study. I mean, we want this, the fast track program, we don't want to spend 6 months doing that. And you're going to join a Discord group and you're going to be in there for a year or 6 months. Well, what good is the Discord? All you're doing is dealing with other people with your own experience, and you're just passing bullshit back and forth. You need to learn this stuff and take responsibility for it so that you can be successful. And 6 weeks is too long. I only say 6 weeks because, Jesus. Well, we're working. We got jobs to go to. We got family responsibilities. So you might not be able to put 4 hours a day into it. So it'll take you 6 weeks to get through. But 6 weeks is really pushing it to learn all this stuff. The fast track course itself is 150 or 70 pages. I don't know how long it is because I add to it and I change it and I move it around. It's a dynamic living thing. And then when I work with somebody, I'm doing consulting with them at that same time. And so that 6 week period of time, that's really critical. And these 3 things that I'm talking about are assumed when somebody begins to take the fast track course. If you don't have the background to do that, I'll try to help you get that information. Go to babypips.com. Learn this, learn this, learn this, learn this. I've got probably 6 quick sheets of stuff. Like I talk about the demo. What do you do in demo? These are the things that you learn in demos. They're like checklists for somebody who has no relative experience. Read this book because it'll give you the essence of what trading is all about. Go to this website and learn the plumbing of this. So I'm trying to get folks to build that base, and that base is based on, number 1, having a good broker, number 2, at least $1,000 live account. You use demo for what it's good for, teaching you the trading platform. That's it. Get out of it. And when you're learning in demo and you're making trades and you're doing all this stuff, you do it with $1,000 account. So you're trading one mini lot. It's called a mini lot, right? You don't want to be putting $7,000 to $10,000 up to trade one full lot. In the U.S., I don't know what your margin requirements are. In the U.S., we have a 5% margin requirement. So if you have $100,000 worth of currency, I mean, let's say you have $125,000 worth of currency, you get a 1.2500 price. So that's $125,000. You multiply that by 0.05, 5%, and that's the amount of margin that you need to trade one full lot. So today, to trade one full lot of pound dollar, for example, is about $6,300, $6,400. So what are you going to do? You're going to come to the table with $6,400? Or in the case of a $1,000 account, it'd be $640. So what are you going to do? You're going to trade a mini lot with $640? If you lose $10, you can't trade a mini lot anymore because you're under margin for whatever your country's requirements are. You may not be in a country that has margin requirements. Holy Christ. You're trading with a loaded gun. No margin requirements, no leverage requirements. Basically 500 to 1 is no leverage, and there's some places in the, I'm not going to tell you where, but they'll go to 1,000. Well, what do you, I'm going to put $1 in? I understand that in some countries $1 might be worth what $15 in America would buy. So maybe you need that. Maybe you can only come to the table with $100 and trade that. Well, that's fine. But regardless of the price differential, if you're trading with under a $1,000 bank, you don't have enough runway there to make mistakes. If let's say the margin is $650. So what are you going to do? You're going to trade with 700? That gives you a $50 runway, which is 50 pips on 50 pips, $50, and you'd be under. So you're saying, well, I'm not going to lose 50 times in a row. I'm going to win some. Yeah, but when you're short sheeted like that, you're going to do stupid shit, and it's only $650, so you lose $10 or $20, and it's maybe a day's wage or something for you. I don't know what your situation is. Here, you lose $50 and that's a couple of pizzas. But that $1,000 gives you the runway. And even if you have no margin, you should pretend that there is margin, because that's risk management. Oh my God, and these people argue with me when they send me emails. I want to get on a conference call with you and I want to talk to you about this stuff because I really don't get it. I don't understand it. I'm not going to waste my time because you're too stupid to argue with. I'm not going to do that. I got better things to do than argue with people. If you don't think that what I'm telling you is the straight scoop, fuck you. That's fine. That has to be your option to want to go argue with somebody else, but don't argue with me because I'm not going to argue back with you. I don't have time for that. If you think the right way, you're doing it the right way, then do it the right way. Don't listen to me. It doesn't matter. I don't care. I'm trying to help people in the totality of what we call risk management. If you can get risk management under control, your success rate goes way up. Instead of 90% against you, maybe it's 80% or 85%. That's 5%. That's your edge at that point over all the other fools that are out there doing this crazy stuff, trading a $50 account or a $100 account. That doesn't matter. Even in your currency, $50 US doesn't amount to that much. And you're pushing it and trying to trade. It's crazy. You need to at least have a $1,000 live account so that when you lose, it hurts. And you'll learn from that. Well, you'll learn from that if you have good education. If you've got somebody there, you can say, well, this just happened. I did, what's wrong? I don't get those questions because I build a better foundation than that so that you're prepared when you go in live trading, that it's just a real seamless. You go from demo to live trading, and of course, it's the same process. It's the same, because how long do you think you're going to have a $1,000 account? You're going to have $30,000 account or a $40,000 account, and those size accounts trading 3 and 4 full lots at $30 or $40 a pip, now you can start to significantly impact your job income. If you're making $30,000 or $40,000 a year and you're trading with 3 or 4 lots at $40 a pip, I mean, you make 5 pips, you make $200. If you could average $200 a day, man, that's a lot of money a year. So risk management is at the base of that. But when you're trading in your beginning experience, you have to trade $1,000 for a mini, $10,000 for a full, $100,000 for 10 fulls. Well, I'll never have $100,000. Well, maybe by that time you won't need it. You can trade a margin to be $6,300. You trade with a $7,000 account to trade a full lot because you don't have to worry about losing 80 times in a row on a full lot. That you have your skills. You're a 60-40 trader and you're consistent in your trading. You can trade close to margin. And you can increase your leverage a little bit. I mean, these are all things that you could do, but you could do later. You know, you don't take a little kid and throw him into a swimming pool in the deep end. You put a little floaty on him and put him into the shallow end. Well, if he's got a floaty, why can't he go into the deep end? Well, because he's got to be able to touch his toes to the bottom of the pool. So he knows how to bounce to get air. So when you take the floaty off, he goes down in the water, he bounces off, and he comes back up. That's how you learn to survive. And so part of that learning is to have a good broker behind you, first of all, that you can trade at the requirements that you want to trade at, not at the requirements that the broker wants you to. And that's the problem with prop firms, is you can't trade the way you want to. You have to trade the way the prop firm wants you to. And you're paying a certain entry fee to do that. There's no risk on the part of the broker. They're paying with your entry fee, and that's your risk. That's all you can lose. Once you lose that, the broker's not out. But they're requiring you to make, what, 2% a month or some stupid thing like that when you get started and you have these goals and you got to do it. And it's against you. You have to learn what a good broker is instead of some of this foolish stuff that you think, oh, I'm going to take my $100 and I'm going to get funded and I'm going to pass this test and I'll have access to a $10,000 account and then I'll be able to. No, you won't, because you really don't have access to $10,000 in cash. You have access to the risk that they're giving you. That's it. You better learn about what these brokers are doing. Your third thing is that as you are trading in this live account, you set a short entry stop. And this is where I get a lot of blowback from the experienced traders. Well, you know, you're not giving that price room to breathe and blah, 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 and all that. Well, excuse me, but your most important phase of the life cycle of a currency position is entry analysis. Entry analysis, position management, and exit methodology. If you don't get a good entry, you're not going to have a position to manage. And if you don't have a position to manage, you don't have any exit theory that you need to worry about. I think anybody that says that the exit is the most important part and the entry is not important, I think they're an idiot. Sorry, but there's some experienced traders that say that. Your exit is most important. No, it isn't. You can automate the exit, but you can't automate the entry. Well, I'll use a robot. They have pretty good, they're pretty good until something changes in the market. And they don't react fast enough to it. And because they're programmed to do a certain thing, they're expecting certain stuff. And because the market is fractal and they're looking at that fractalness in the market, they'll continue to make that same mistake until it says, if it's a good robot and it's AI based, it'll go, the market's changed. But by that time, you've lost all the money that you've made and the money that was in the account. The guys that are successful with the robots trade $500 with the robot and they let it build up and take the money off the table, and then the thing crashes and they'll go buy another robot. And at least they've got the money out that they did it. But there's so many people that either want to go signal services, or they're going to do robots, or they're going to do this new AI shit. I was a software engineer for 33 years. We used to call AI simply knowledge base searching. It wasn't AI. It was simply like you'd search for somebody's profile by putting in their phone number, and the programming would find it. That's all AI does, except there's another piece of it off on the side that's supposed to teach it more. So, if I ever see this phone number again, it's this guy, and it stores that information. So now I type in that phone number, and magically there's that guy. Oh, and by the way, besides the profile that we have on file, we're going to go out and ping all these other websites, and we're going to see if that phone number is found anywhere else, that guy's name is found anywhere else, that guy's address is found anywhere else, and it goes, and it comes up, and there you have all that information. So AI itself is not a big deal. The fact that it's self-learning is the big deal. So we'll see how that all turns out. But ultimately, you have to understand what the market is doing in order to determine whether that particular series of trades that the robot is making are logical and have risk management at the forefront. If you don't have risk management, it's like driving your car with a blindfold on that you can only, you have a little hole in there and you're kind of being able to see, or driving with the frost on the windshield, and you're kind of feeling your way through. It's just not worth it. So setting a short entry stop is part of the education process. If you're constantly getting short stopped out on your entry, it doesn't mean that the stop is too short. It means that you're not understanding fully entry analysis. I mean, in the fast track program, for example, that I've got, say there's 170 pages. I think there's 170 pages to it. Probably the first 50 or 60 pages is all centering around setting up a entry analysis, because you've got to get that right. If you get that right, then it doesn't matter what the stop is. It could be 8 pips, could be 20 pips. It doesn't matter, because you're going to hit that. Let's say that a short stop is, I start folks out at 8 pips. Find out how much they don't know. But then when they get more experienced, I don't say, well, you could set it out at 10 pips or you could set it out at 20 pips, because your entry analysis is so good at that point, or better, that you acknowledge that on the particular time frame and currency pair that you're trading, that 10 or 15 pips is a normal retracement. And so you don't want to get, if you have a 67% chance is a bad word. If you have a 67% probability that your trade is going to go, maybe not to the profit target, but at least to get 8 or so pips, then you don't mind that 15 pip retracement without a stop, because that'll turn around and it'll buffer out and you'll go forward. So you might want to set the experienced traders then set their stops out at 20 pips. Some set them out more. Bank traders don't have stops. So there you have it. The stop is a learning opportunity for you. After you learn and you get your entry process right, and in working with me in the courses, we have different metrics that we look at on almost a daily basis. What is the metrics? How are you doing with the trades that you're making? And if those are not getting better, then we've got more metrics, I guess you'd call them, that we can look at to say, oh, well, this metric is a little bit off. That means I must have done this when I traded, or maybe I got into the entry too soon. I was working with a guy the other day, and that was the whole thing. He was starting to hit the stop a little more often than he did before, and he was doing anticipatory trades. He thought he knew what he was doing. He didn't know what he's doing because he's just getting started, but he thought his perception of where the price was going to go was better than what it was. It wasn't. And so he was getting stopped out too many times. We switched that right away. He figured it out, and it's good. The statistics came out far better. So setting that short entry stop is important because it'll prevent you from having price run against you 8 pips, and you go, oh, I think it's going to do it, so I'm going to take my stop off, and then it goes to 12 pips, it's 15 pips, and now it starts hurting. You go, oh, I can't get out now because it's got to come back, and now all of a sudden it's 50 pips out, and you're wiped. So those are the 3 things that you need to do right now, as far as I'm concerned, in getting started with your trading. Is you need a good broker. You need to be playing in a real account with at least $1,000 so that it hurts when you lose and you'll pay attention. And then you need to set that short entry stop so that you get hit a lot, so that it hurts a lot, so that you learn a lot. It couldn't be any simpler than that. Good luck. And if you follow those things or have any questions, send me an email. Let me know. I appreciate the comments. Please comment and subscribe to the channel. But the real feedback, send me an email and I'll go, oh, okay, well, you're getting that. Have you thought about this? And I'll do that for no charge, because it's my time in working with folks at the course that I'm retired. I got stuff I want to do, and I don't want to work with 4 hours a day, 5 days a week with conferences with people that are doing this work. Because the more people that you get involved in the coursework, the less time you can spend with them or in depth or get to know them. And a lot of the people are just saying, oh, I got the money, I'll pay for the course and I'll get into it, but they're not really committed. I really haven't had a chance to really get to know that person. I want to get to know you before we even get into taking the course. You don't just send me money and, oh, okay, you're in the course. You have to go through a series of onboarding steps to see whether you're being honest about what you know and what you can do and where you want to take your trading. I teach a very specific FOREX day trading process, so that once you complete that, if you want to go to a position trade, long-term trade, you can do that. You want to swing, you can do that. You want to scalp, you can do that. You can do anything, because it's based on good risk management. It's principles that create a process, and what I teach is process-oriented trading. And so if you are starting out, you have a good broker, at least $1,000 live account, and you're setting that short entry stop, you should be more successful than without doing those things. And I'd like to hear your thoughts on that. If you do those things, or you've done those things, yeah, you're right. Or if you think I'm full of shit, go ahead and send me an email. I may or may not respond to it, depending on how respectful you are and the way that you're telling me I'm full of shit. I don't mind you telling me full of shit. We all have opinions on what's important and how to do things. So if you have an opinion on something, well, and you think I'm crazy, well, first of all, you're probably not listening to the video anymore, so I'm preaching to the wrong choir here. So, Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.